Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets have opened up a bit subdued.
Bank Nifty slightly outperforming the Nifty. Here the support is the 20-day moving average, which comes in at 54,680.
And yes, IT has been focused. It's down 5.5% so far this week.
If any significant weakness in some pharma stocks, I would look at as an opportunity to accumulate the stock based on information available right now.
30 aircraft by 2027.
24,840, 24,850 is where we are at on the Nifty.
Bharti can genuinely do very well in 3-4 years.
We have to assess the impact of the tariff.
I would hold.
Hold. Okay, I thought so from the way you said. Wait for uncertainty to abate.
Very same judgment has been U-turned, and it's cleared the way for JSW Steel's resolution plan for BPSL, that is Bhushan Power and Steel.
It's a sixth day of losses now for the Nifty.
Novartis has planned to invest around $23 billion over 5 years.
Telangana government has agreed to take over phase 1 of the Hyderabad Metro Rail project from L&T. We're down 0.7%, all indices in the red as you just saw.
Well, it is a pretty poor session. That's the day so far. We are down 250 points. 24,800, that big level is gone. And now we are, of course, looking at much lower levels. Across the board, market breadth, terrible. Large caps, mid caps, small caps. I mean, it's a bad Friday. No other way to put it. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surabhi and Rima with me. Guys, good afternoon. Nigel is joining us from the newsroom floor, guys. Nigel, good afternoon.
Hi, you classified it as a bad Friday. I thought it's a bad week, right? The Nifty is down close to about 3%. The mid-caps are down 4.5%. The small-cap index is almost inched towards a 6% loss for the entire week. And Hormus tells us it's the worst week since February.
Yeah, and you know, the entire rally that started towards the end of August, I was looking at levels. 29th August is when the market started its up move. It was a slow and steady, but it was a good rally, 1,000 points. We are very close to giving up most of those 1,000 points. The rally started from a level of 24,400, thereabouts. That's where the recovery process started. We're just about 250 points away from that. So let's see. Hi, Nigel.
Nigel is coming on, sir.
Okay.
Okay, all right. 24,642. I think about 250 odd points. That's it to go back and retrace pretty much everything. And the level we put out in the morning was 24,800. That was like the make or break. And that got taken out in the first, I think, within the first 1 hour or so. But it's accelerated in a very, very dramatic fashion starting about 1 o'clock, 1 p.m. or so. And I think the chart will tell you the story on the Nifty Bank as well. I think something similar there. Yeah, around 1 o'clock is when the selling, really picked up on the Nifty Bank on your screen. And just look at the mid and small cap indices. It's a 2.5% cut now on the small cap index, and I think the mid cap index also something similar. Started at about 1 o'clock, 2% cut there. Market breadth is 5:1. 5 stocks lower for every 1 stock which is higher. So, it's really kind of a slam dunk sort of a day. Let's just quickly run you through what's coming up. So markets, of course, down, 5th straight session. It's, as Rima pointed out, worst week since February. Pharma is the worst loser, of course. There's news there. IT stocks also lower. Accenture has issued a weak guidance. So we'll talk about all of this stuff in greater detail as we kind of sort of go along. Many of the large cap IT stocks taking a bit of a hit on your screens now.
And IT is a sector which went into this week with about a 15% cut, right? And everyone was trying to find value. So for a sector which was anyway so beaten down 15% on a year to date, it's taken another 8% knock. That's the extent of the fall. So, I mean, you were trying to find value, but in the face of H-1B visa wars, the hike and slowing growth, there is no value, right, at the end of the day.
You're absolutely right, Rima. And I think what has also happened with IT, there's Accenture.
Accenture, yeah.
Right? So that is the primary driver in that sense?
For today, it's the primary driver because Accenture's organic revenue growth is 0.5 to 3.5%. Yeah. Basically, it's reiterating. It's not that it's fresh news. You know that IT is not growing this year. It's going to be in low single digits. But this is a reiteration that, guys, there is no growth.
Yeah. There's one more thing I'd like to add, which is that, there was a bit of a break between Trump's tariff announcements, right? There was almost a period of a month and a half, no real tariff news flow. And suddenly you've got a bunch of all these
escalation in the...
So it's not, the issue is very much alive in that sense. And with IT, I saw a note on HIRE, the HIRE Act, which has been proposed and is in the Senate right now. 25% tax on offshoring.
Outsourcing.
So outsourcing. So I think that is the...
fear.
That is the fear. I mean, it may not go through, etc., but I think it does raise the concern in that sense. I think, is Nigel with us now? Okay,
I think let's get to Mitesh then.
Yeah, let's go across to Mitesh for his quick take on how the market seems to be breaking down. Mitesh, how do you look at it? Levels?
Yeah. Afternoon, Prashant. So, today morning also I said that we'll be slightly negative because we've started trading below 25,150. And I looked at a possible target of 24,700. The idea was that we've been falling for the last 6-7 days, and today being a weekend, I was hoping that there'll be some short covering. That's what happened. In fact, today morning we had a gap down and there was no attempt by the Nifty to fill that gap, which means that the recent lows of 24,450, 24,400, 370 zones, I think those, that range could be revisited. I think while the market after 6-7 days of decline may give you mild pullbacks, but as long as we are not capturing 24,850 again on the upside, I think the texture will be slightly on the negative side. And as I said, I think 24,450, 370 zones could be retested. Having said that, on the stock side, Jindal Steel is coming on my radar. Sorry.
Go on, Mitesh.
Jindal Steel is coming on radar. I think the stock is trading around this very critical support of 1,030. So, and the structure is slightly turning negative in metals as well. So, if it breaks 1,025, 26, take a short position with the stop about 1,046 for targets of 985. And Indus Tower is a sell. Keep a stop at 353 or 353 half and look for a 332 kind of a target.
Okay. All right, Mitesh, got that. Thanks very much. By the way, look at the VIX. The VIX is up by, I think, 15% today. So, and that's been rising. Even yesterday in trade, the VIX was up, so 7.5% this week. If you look at that's today. If you look at this week, then it's up in double digits. Yesterday, the VIX was up about 3.5% as well. So steadily, that's what I'm talking about. 7 days, 17% rise in India VIX. Not the best of signs if you look at it as well. And the broader market today, there's a total slam dunk. There's a lot of selling there. If you're looking at the mid-cap index, it's down 2%, twice as much as the Nifty. The market breadth, almost 2,400 stocks declining and only 400 stocks advancing. So it's telling you it's a very different kind of a market as well. I suppose what this has done, the twin actions on pharma and on IT, is that all the excitement that was rising, around Prime Minister Modi's birthday about the social media exchanges and we're friends and all of that, I think that's also gone, at least for the time being, it's gone out of the window. So whoever was putting in bets saying that there is a resolution and immediately something is in sight, because the actions are not adding up with the social media messages and the exchanges. And remember, our Commerce Minister has come back again. No concrete, forward steps on the trade negotiations as well. So all of that has obviously added up. Before we start talking pharma in a big way, I just want to point out the losers in the broader market. And there's so many casualties out there. Some are on news. For instance, Wari is down 7%. Because of this probe that Bloomberg has reported, which has started in the US, that they're allegedly circumventing some US regulations, and there's a probe that's underway. Vodafone Idea, obviously, because nothing came from the courts today. But even beyond, if you have a bunch of pharma stocks which are down, but non-pharma names, PSU names, NBCC, SAIL, Hoodco, lots of names on the downside as well. Hindustan Copper yesterday was rallying on the copper rally. Today it's straight away profit taking, 5% lower. Anyway, that's the texture of the broader market. But let's stick with the big story of the day, and that is the 100% tariff that has been levied by the US president on imported branded drugs and patented pharmaceuticals coming into the US. We have Ekta joining in with a detailed account of what this means for Indian pharma stocks.
Trump's announcement on 100% tariffs on imported, branded and patented pharma products is targeting innovator companies, say analysts. many of whom had anticipated such a policy and announced large US investments. For example, Novartis plans to invest $23 billion over the next 5 years in the US. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on a $700 million facility in the US. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics and 40% of the US requirements. Generic-focused firms like Dr. Reddy's, Lupin, Cipla, Aurobindo are unlikely to be directly affected, though concerns remain about the potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which includes drugs like Ilumya, Odomzo, Sequoia and Winlevi, makes up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could in fact trim 5 to 10% of their EBITDA. But Sun, however, has not disclosed US production levels. It has said its existing capacity, however, is sufficient if required. That's what they had indicated in their previous analyst call. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, manufactured in Europe, is set for US FDA filing. The company, as of now, lacks any US manufacturing presence, which could leave it vulnerable. The market is also wary of potential effects on CDMO players if formulation companies, in fact, redirect capital towards US capacity, reducing offshore outsourcing. Now, implementation questions remain, however, including whether the tariffs will override the US-EU trade rules that cap pharma tariffs at 15%, and whether APIs or finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe that adverse steps are unlikely given the dependence of US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. For example, Aurobindo's $250 million acquisition of Lannett added a CGMP facility with a large tablet capacity, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more acquisitions of mothballed assets as well as other assets and new capex if in case the trade tensions do persist.
Okay, that is the big story and statement coming in with respect to the India-US trade deal and Piyush Goyal's visit to the US. And the key takeaway is the delegation had constructive meetings with the US government on various aspects. Both sides exchanged view on possible contours of the deal. They will continue with the engagements in order to achieve an early conclusion of a mutually benefit trade deal. The meetings have evoked a positive response, and the business leaders repose confidence in the India growth story. They've expressed a desire to intensify the business activities. It all sounds very good, right? But at the end of the day, there is nothing which is being signed.
No,
or a conclusion.
There was no. To be fair, there was no expectation that something will be signed on this visit. But this does look. It's a very, balanced, carefully worded, almost sanitized. No real excitement in that sense, right?
You use the great word sanitized. I was thinking, if you were the press secretary or the press person in charge of the Commerce Ministry, what is the statement you'd write? Exactly this, right?
So, and I think this is also because of essentially who you're dealing with, right?
Yeah.
And you don't want to say something and then it gets picked up and then, So, and that's the reason why I think for the last 4-5 days there's been zero news flow. On this, US-India, although our minister has been there and talks have been undergoing. So absolutely, hope is work behind the scenes quietly and get something done. And I think this is a move in that direction. But this is the only thing, both for the currency and from an equity point of view, which is the most important bit.
But I don't want to sort of throw cold water on any hopes at all, as hopeful as all of us and the rest of the market. But if you go by Mr. Jaishankar's comments. They weren't as, quote-unquote, sanitized as the Commerce Ministry statement right now, because he brought out that issue on, self-dependency and energy security and trade and security and how you balance out the needs of individual nations. So let's see. Politics still very much center stage, global politics, when it comes to the market, the street here.
And global markets today were also downbeat, right? Most of Asia's ended with losses. Hang Seng's down about 1%, about 1.25%. You've got a cut of about nearly 1% on the Japanese markets. The Shanghai index lost more than about 0.5%. So even Asian markets, there you have it, like more than 1.5% gone on the global picture. As post the strong data coming out of the US, there's a rethink on how many rate cuts we will get. So there was softening in the global markets. I'm just saying that's added to the the escalation in the tariff tensions.
We didn't have the best of cues, to start with, no taking away from that. Anyway, but let's get back to the big story, the pharma impact, which continues to play out on the entire pharma spectrum, even though generics have not been touched, at least as of now. We caught up with Mr. Habil Khorakiwala, a veteran of the pharma industry. Remember, Wockhardt itself has sold off its US generics business recently, but they do have a drug pipeline and they're planning to file a couple of these products in the US. He explained to us what the implications could be for Wockhardt as well as Indian pharma. Take a look.
See, Wockhardt is not has exited a generic business completely from US. So as a company, we are not affected at all. But talking of industry as a whole, it's very difficult for the US to have drugs not coming out of India because 40% of entire usage of medicine in US comes from manufactured in India. And if there is a shortage of drug because of any other reason, it will have a catastrophic effect in the healthcare management in the US. So either the levy will be passed on to the user, that is to government or to insurance companies, and the prices of the drugs will go up accordingly.
I strongly believe that generics will be exempted because putting tariffs on generics can be disastrous for the US economy, the US healthcare system. Drug shortages can go through the roof, which can hit back at Trump's support base. So generics will remain exempted in the foreseeable future is my strong belief. And in addition, the tariff on the branded drugs, if at all some real, in select cases, very select cases, not across the board, could benefit generic pharma as well.
Okay, we'll get to Dharmesh Kant and ask him his view on pharmaceutical, but Nigel is also joining in. Nigel, hi. Afternoon.
Afternoon, what a day, right? I mean, just take a look at the markets at the low point of the day. Who would have thought? The breadth of the market is telling you that portfolios are getting hurt and selling across the board. Let's get in Dharmesh Kant, though, head of research at Chola Securities, who joins us on the show. Dharmesh, is this a buying opportunity? If yes, what are you buying?
Yeah, good afternoon, Nigel. Thanks for having me on the show. Yeah, definitely this is a buying opportunity, but you have to be mindful of what you are buying. And the idea is very clear. I mean, you have to buy domestic-centric companies where the focus is entirely domestic, and Government of India is the biggest spender out there. So, I mean, infrastructure space for the likes of, say, L&T, they are likely to do well going forward in the S2 of FY26, and that's typically a good season for them. So, infra space, railway infras is also looking very good. Auto infos has been coming in thick and fast for most of the companies. And there, I think Ircon International is fairly priced, and with this correction coming into play, the valuation looks pretty attractive going into the second half of FY26 with the budget in the mind. The spaces which we like has been the defense, which has been a structural growth story. And again, there has been a rolling in of order inflow, so it is least impacted by any of this. And some in financials like housing finance companies or banking space like private and public sector banks. So these are the select pockets when one should be focusing on, rather than trying to catch the falling life and where there is plenty of uncertainties prevailing around.
Okay. All right, Dharmesh, hi, good afternoon. Stay on, we have more questions for you. Actually, we've spoken so much about the losers. Let's talk about some of the green on the screen as well. And L&T is one of those stocks. It's managed to retain some of the gains. Let's get the stock up on the screen if we can. Yeah, still retaining 2% gain in a market like this. Some good news came their way. One of their projects which hasn't worked out so well for them, which is the Hyderabad Metro. It seems they're finally sorting it with the government and getting out of it. Vivek is here with the details. Vivek, we desperately need the green, the good news. So tell us more about L&T.
Absolutely right. The only green on the screen, apart from what most of us are wearing, but when you're talking about L&T itself, the important development. Remember, the Hyderabad Metro has been dragging the financials for quite some time. In fact, almost 6,600 crore of accumulated losses over the last half a decade is what L&T has been suffering due to its exposure to the Hyderabad Metro. So yesterday, reports indicate that Telangana government is now going to take over phase 1 of the Hyderabad Metro Mail project. They will buy out the entire equity stake of L&T, and they will pay L&T 2,000 crore for this. Remember, L&T's ask was close to 5,900 crore. But more importantly, they will also take over the debt of close to 13,000 crore. And remember, L&T was paying off the interest cost, post which it was becoming unviable for them to go ahead and continue running the Hyderabad Metro. Now, important reactions coming in as well. JM Financial says this particular exit potentially removes a long-term overhang on the stock and is modestly EPS accretive. Exit from the assets avoids PBT PAT loss of close to 626 crore on an L&T level, this on an annual basis, and expect an EPS uptick of close to 4%. Losses were at approximately 3% of L&T's consolidated PBT and approximately 4% of the profit after tax for FY25. They believe that this exit is also further positive given the fact that it boosts ROE by close to 60 to 70 basis points. We also reached out to L&T. They had to respond to our queries on this particular development.
Okay, all right, got it. Thank you for that, Vivek. Dharmesh, L&T seems to be, slight good news that's coming in. What's your call on the stock?
We have a buy recommendation on the stock, and the reason being the order book has been pretty strong. Almost over 6,12,000 odd crores of order book they are sitting on. And last quarter Q1 was also exceptionally good, almost 30-40% kind of order book growth at 76,000 odd crores. This quarter also the flow has been quite significant. On a base case basis, 46,000 odd crores of order book they have already won. And I think with GST benefit and all rolling in, there can be some incremental 10-20 basis point kind of a margin accretion to the overall run rate. So we are expecting 12 to 15% kind of a growth. And in this environment, when you are looking for stability with such kind of a growth, I think stock price is already low and 15-20% from the all-time highs. So that kind of a tracing back to the all-time highs is a possibility. It's a tactical fundamental buy as well. And going into the budget with more infra push coming into the play, good news can be expected on the factor.
Okay, all right. Dharmesh, I wanted your view on this company, Vare Energies. I think you had got it spot on. I think you had some coverage out there and the stock did quite well. However, today the stock is under some pressure. Let's go to Vivek. He'll revise the piece of news and then Dharmesh should tell us what should investors do. Vivek, you take over.
Well, that's right. So Vare Energies, remember there's a potential overhang and some concerns as well. So what reports are indicating is that agencies are reporting that the company is under the probe by the US Customs Department. And this is for evading solar tariff duties. Customs officials are actually investigating if Vare Energies sidestepped US tariffs by going ahead and exporting Chinese-made cells and panels and labeling them as India-made exports. Remember, Chinese-made cells and panels are subject to both anti-dumping as well as countervailing duties in the USA. So they are subject to much higher tariffs compared to what the Indian exports are accustomed to or are subject to. Now, talking about this particular development, this is actually in addition to an earlier worry that the company faced in August 2025. Remember, a consortium of US solar manufacturing companies petitioned for both anti-dumping as well as countervailing duty on Vare Energies. And why are we talking about Vare in particular? Remember, over 40% of the order book actually comes in from exports, almost 20% of the top line from this particular geography itself. Vare went ahead and gave a clarification to the exchanges. They're saying that in the past they have cooperated with US investigations and they will continue to cooperate in the ongoing investigations.
Okay, all right. Thanks a lot for that, Vivek. Investigation ongoing, stock under pressure. Dharmesh, what do you make of this? Otherwise, I think you highlighted the prospects. The runway is quite large. But this clearly has hurt sentiment.
Thanks, Nigel, for asking me this. See, we have been recommending. Yeah, definitely, yes. See, we have been recommending Vare Energies since its IPO days at 1,500. And subsequently, we had this stock in our high conviction mid-cap basket, and then we had an initiating coverage at around 3,100. But we were aware of these developments in our interactions with the management, and there's a first solar company in the US, which is a serious competition to them. And management has always maintained that these are allegations which they can put it on. However, the stock price did touch the target price of 38.50, and there we decided, because of all these exigencies troubling in, to book profit and get out of it. So as far as recommendation is concerned, we have given a profit booking at 38.50 with our target price, because the run up was very fast and very soon. And as far as fundamentals are concerned, those are in place. They also have a capacity in US, but these things are creating a bit of a problem for the company. And if it materializes in whichever ways, which I suspect it will, but in case that's the scenario, then there will be a significant dent into their profitability, because 40%, as has been pointed out rightly, does belong to the exposure is to US. As of now, 17% has been accounted for, but eventually it will grow to 25, 26%. So, I mean, let's wait for the management's further clarification, concrete point by point. At the same time, if this fall should not be used to, buy or take a fresh position into Waaree Energies. So solar, as of now, with Reliance and Adani coming into play in a big way, I think it's better to be on the sidelines rather than being invested into it.
Yeah. Point taken there, Dharmesh. We'll leave it there. Thank you very much for joining us. Good speaking with you as always. Had a bunch more questions later when you join us. Have a good weekend. We'll take a break. We are back. And we'll go across also to Vijay Khandelwal, who will be with us when we return. Of course, it's been Ajay Khandelwal, beg your pardon, Motilal Oswal Asset Management Company. We'll also have Hormuz with us as we come back to put the spotlight on the movers in the market. Stay tuned, coming up.
Welcome back. Still down 1 on the index. The mid-cap index is down 2%. 1,200 points now gone in the mid-cap index. No sight of recovery. 30 minutes to go. Let's put the spotlight on individual stocks, the ones that are getting hit hard and the ones which are still managing to buck the trend. It's over to Hormuz.
Well, the market has had a very forgettable week, but the one segment that has not had one is the auto ancillary space, and they continue to move a bit unabated. And both RACL, Geartech and Automotive Stampings, both of them are seeing double-digit gains even in a market like today's. And you take a look at the volumes here as well. RACL Geartech has seen 15 lakh shares already being traded compared to a 20-day average of just 22,000 shares. And look at Automotive Stampings as well. 55 lakh shares have already changed hands today, and compared to a 20-day average of just 65,000 shares. Now, that's where the good part ends. Now, you go on to the losers today. Prudent Corporate Advisory is the one is down all 5 days this week, another 6% shaved off today. The 13% fall this week has now made it the worst week that the stock has had since March, and we have had more than 2.5 lakh shares traded today compared to a 20-day average of just 15,000 shares. And now important levels on the downside after this fall is the 200-day moving average support of 2552. Very close to that level is Prudent Corporate. The other one, of course, had to mention TCS. 6th day of losses now for the stock. 52-week low, has lost nearly 1 lakh crore in market cap this week. The weekly volumes are the highest since April. We've had more than close to 2 crore shares that have been traded on TCS this week. We had 35 lakh shares change hands today itself, and that is almost double of the 20-day average of 17 lakh shares. And the price at which it currently trades of 28.95, only 3 analyst targets are now lower than the current price of TCS. So that is one level that you need to watch out for. And lastly, Apollo Pipes. And pipe stocks have been in the news over the last few weeks, and this is down for the 5th day as well. 15% down this week, the worst one since March of 2020. And this is had today's session. We have had more than 3 lakh shares that have changed hands. The 20-day average here is just 43,000 shares. It is trading below all key moving averages considering this fall, and the underperformance continues because it's down 25% this year already, was already down by a third in 2024. So an underperforming stock is Apollo Pipes.
Right. Hormuz, thank you very much for that. So those are individual moves and what's happening out there. We have Ajay Khandelwal, who's with us, fund manager at Motilal Oswal Asset Management Company, manages a range of equity hybrid schemes. Ajay, great to have you with us here. Thank you for joining us. Market may be whatever it is doing, but I was checking out, looking at some of the stocks you own in, some of your funds, names like, CCL Products, Shelley Engineering. It's been fantastic going for many of these companies actually, as I'm looking at it. With full disclosures, etc. I don't know if I can entice you to talk a little bit about Shelley. And broadly run us through what the logic is and what prospects are. And of course, not to be treated as a buy or sell recommendation.
Yeah, hi, thanks. So again, sorry, can't speak about individual stock, but if you look at the space, for example, the GLP-1, I think we have spoken about it before also. So if any business which is part of value chain and participating in GLP-1, I think they are benefiting. Secondly, if any business which is engaged into durables, fast-moving products like mobile phone, so some of those businesses are seeing traction. The order books are improving. So I think any business which is to do with these two areas are doing well. Also, I think where we are focusing on is that we are looking at those kind of businesses which are kind of market leaders who have global market share and where they have seen some kind of adverse commodity cycle, and now that is reversing. So the working capital is improving and they are seeing profitability improvement now. So I think that is working for us, Prashant. And generally, if you look at our portfolio, you will find that we run concentrated portfolios. So whatever is happening around, I think some of these businesses clearly have no impact because of it.
Hi, Ajay. Good to see you in. This is Nigel on this side. But what's your take on the markets on the whole? Last 1 year, India has been a stark underperformer. And it's the largest underperformance you've seen in multiple years. Even if you compare the Indian markets to the emerging market index. Do you think that we're getting to a stage where, in fact, it's either make or break? And which side would you be leaning towards? Also, a quick word on earnings growth, because we say the Indian markets are adjusting themselves, etc. But earnings are yet to show up. So do you believe second half of the year we'll actually get to see that earnings growth, the long-awaited earnings growth?
So Nigel, how we are looking at this whole situation is that I think from last September onwards, we have seen almost 5-6% kind of earning cut in Nifty. Whereas it's not that the globe, the other emerging market developed economies have seen earning upgrade. It's just that there is re-rating which has happened. Some bit of it can be a function of they have better AI plays and market believe. I think that businesses which are providing and dealing in AI or beneficiary of it will do well. But it's not that their earning upgrade has happened. Whereas for us, in last 1 year, we have seen earning cut. And now if we look at it, as you mentioned, compared to the global and emerging market, our market premium now are at 10-15 year low. So from valuation perspective, from earning going forward, we don't see any earning cut. So I think given the uncertainty for this quarter, but if you look beyond that, we are very well placed.
Ajay, I know you look at the jewelry space. There are some investments in Bluestone, Kalyan, Sky Gold. So again, not getting into stocks, but have you done any channel checks on the kind of retail demand we've seen this festive season, given the prices are at record levels? I mean, what are the footfalls looking like?
See, because there is almost 40-50% kind of increase, we expect that volumes are going to come down, but all in all, the overall sales numbers will still show 25-30% kind of growth. So I think this is what, as of now, the channel check suggests. And if you combine it with the festival sales for other discretionary products, which has happened last 1 week, we believe, I think it has surprised positively. Even though there was no GST cut on some of the luxury items, but even they have seen the kind of premiumization. So I think we believe the discretionary products, especially the higher ticket size products, will continue to do well.
The gold jewelry companies can sustain this 25-30% kind of revenue growth, even if prices plateau at these levels. It's still very expensive, right? 1.2 lakh for 10 grams gold.
So see, our understanding after talking to the managements is that people come with a certain amount in their mind. So if I have a budget of X amount, I actually go and spend that. So when you look at the volume growth, because the underlying commodity prices increase, you will always say that volume growth is lower. But it is the overall spend which is still increasing. The same is true for other industries where actually commodities, they have seen deflation. So there the volume growth is higher, but the overall revenue is not so great. So that always is the case.
Yeah, I mean, is there a consumption over capex kind of preference you have, or this is all single stocks? I mean, doesn't matter. As you said, it's concentrated and most of the holdings, at least. And I'm not talking about large caps, but I'm talking about some of the mid and small caps. They, as you said, they don't too much impact from what's going on around.
See, how we look at it is that with all the macro factors, which are those stocks and businesses which will be least impacted? Now, we have clearly preference. So, for example, rural is doing well, and now we see that urban will make a comeback. So we have added those stocks where now the urban presence is higher. Even in terms of, if you look at sectors, for example, maybe IT services. Now, we see that there are these uncertainties which will impact the near-term growth. But if you look at the business process outsourcing companies, the dependency is extremely low on some of the factors which are adversely impacting the services. So there, within sector, we have looked at those sub-sectors where the impact is low. Even in financials, if you look at, we have asset financing companies which are dealing into gold primarily. The other financials we have is on the capital market side. So, Prashant, our idea is always simple. We try to make a portfolio which is least impacted by the given conditions, and that is helping.
Yeah. Got that. More later. Thank you very much, Ajay, for joining us. Good conversation as always. Appreciate it. All right, we'll take what we'll do is we'll get you the latest in terms of what's happening on the F&O space. How is positioning looking? Because that is always important to take note of. Nigel has walked across to that F&O desk. Nigel, over to you.
Well, the problem, Prashant, is that all the technical levels are getting broken and any kind of bounce is getting sold into. And today, the sense you're getting in the last hour or so is that, there's no signs of a bounce whatsoever. So telling you some of those leverage positions actually are getting taken out. And the call writers, they are making hay when the sun shines. You look at the 24,800 call, 24,900 call. Open interest built up out there is massive, and that's what's caused the PCR to actually move towards those oversold levels. So we'll have to keep an eye on that front. But for the time being, the call writers believe that when you have expiry on next Tuesday, they believe that they can defend higher levels. So 24,800, 24,900 call. On the downside, the 24,600 put, take a look at the premium. At the start of today's trading session, it was 13 rupees. The last I checked, it was 65 rupees. So those put writers as well are making money. Shorts getting added to the system, calls getting written, and puts being bought. But we're getting to that zone where you should see some kind of support coming in at around this 24,600 odd level. The Nifty Bank, well, that's the problem pocket today because that's given away any kind of support, and that was the one at least that was holding one end up a couple of sessions ago. But the last two sessions, actually, that one as well has given way. However, RBL Bank as a stock actually you should focus on. We have seen it periodically move in and out of the F&O band. Now, in the last 1 month or so, that's clearly been an outperformer. Even this week, RBL Bank is more or less flattish when the Nifty Bank is under pressure. That's telling you the street is sensing something out there, and the positioning is extremely high on that counter. Moving to the other stocks, Alchem Labs, we're seeing some fresh shorting on that particular counter. And there are some unwinding of positions as well as rollovers taking into play. Laurus Laboratories, we're seeing some kind of unwinding out there. Finally, we normally tell you the stocks that could possibly enter the F&O band. This time around, Bandhan Bank appears like the one that's going to be entering the F&O band. And the one that could likely exit the F&O band will be Sammaan Capital. So by the end of today, keep an eye on both these two. They should, feature in the list of making it in and out of the F&O band. Back to you.
Absolutely. It's useful, Nigel. Thanks very much for that. Take a break. We are back. As always, we tell you what's happening in dealing rooms. D Street Chatter with Nimesh coming up in just a bit. And, of course, some buying and selling ideas, short-term, coming up as well.
Welcome back. Market still down 250 points. The Nifty Bank down close to around 600 points. Good time to get you an insight into D-Street chatter. Nimesh joins us. Nimesh, you know, the bails have been taken out by the wicketkeeper. All of a sudden, the bulls have got stunned. What are you picking up?
So clearly, you know, it came as a bit of a surprise, as you rightly pointed out, Nigel. Again, you know, some very crucial technical levels got broken out. So I guess that's putting pressure as well. And again, I've been saying, right, I mean, there has been FI selling as well. But I spoke to a lot of fund guys, the sell side guys and all. Couple of, you know, things which comes out as the key reasons for the recent underperformance. One, the fresh fears of tariff war, right? We saw what happened to IT, and now there is a fear about same thing can happen in pharma as well. There could be few more sectors which can be under pressure. So that's a clear fear about further tariff wars as far as the US is concerned. So that's one big reason. The second big reason is the aggressive FIS selling. We saw what the kind of number we saw yesterday as well. There was a bit of a feedback yesterday. There is a basket selling, and you saw the gross number and the net number. The net number was more than 5,000 crores of FI selling. So that relentless selling is still there. And the third and the most important part is, if you look at you know, the recent support for the system was the domestic liquidity, and now there is a fear that, you know, a lot of these IPOs are sucking out the domestic liquidity in the very short term. I was talking to some fund managers yesterday. You know, the feedback is virtually the entire day they are busy from meetings to meeting, you know, meeting all those IPO companies, and also clearly there is not enough bandwidth for when the domestic funds and the domestic flows to look at the secondary market. It's all getting sucked into the primary market. So these are the few, you know, explanations given for today's fall or for the recent underperformance. As I said, technically also we are looking weak now. Some crucial support has been gone. Mid-cap index is down 2%. You know, the bigger pain is in the broader market. Yes. For the last 1 week, every day you're seeing the broader markets underperforming, and that's clearly, you know, a pain point, so to speak. But having said all this, we keep highlighting this, right? Anytime when the PCA falls below 0.65, you see a bit of a technical pullback. Market looks technically oversold, so one pullback is round the corner. It can happen in the next week or so. But we have the expiry as well as the RBI policy. So that will be the big triggers to watch. Maybe that can be an impetus for a bit of a short covering rally. But clearly, market looks oversold, but there is a lot of FI selling even in today's market.
Well, that's right, Nimesh. Well put. What about individual stocks? What are you picking up?
Well, so again, you know, at least there are some outliers even in today's weak market. So the first stock on my list is AU Small Finance Bank. It's relatively outperforming in a weak market today. There is buy flow, is what I understand as well. A couple of reasons for outperformance today. One, there is a Morgan Stanley note in the morning. They've sharply raised the target price on AU Small Finance Bank to 1,000 rupees. And they believe Q2 would be the worst quarter and things would improve from there on. And also technically, I understand one of the leading long-only fund, who's a large holder into AU, they had to sell some small stake and that's got sold out. So that supply seems to be largely over. So that also explains a pullback there. The second stock is Nuvama. It's been relatively underperforming along with the capital market basket in the last few weeks, but a bit of pullback in today's market, a bit of short covering as well as a bit of buying as well. Also, there was a note in the morning from Citi, and they say that, you know, there is extreme pessimism now, and that's not to fear about. So that explains a bit of move there. The third stock is HDFC Life. This is something interesting. You know, it's relatively down in the last couple of days, but there is buying, is what I understand from some leading domestic funds. So buy flows and delivery-based buying as well. And the last is Apollo Micro. Within the mid-cap names, this is relatively outperformed. Well, the stock is down 5% today, but this month the stock is up 25% and has outperformed. But now I understand there could be a block in this particular stock very, very soon. So that's something to track in APL Apollo Micro.
Do we know who's going to sell, Nimesh, in Apollo Micro? Is it the promoters? I mean, who's going to be participating in the block?
There is going to be one non-promoter entity which has a substantial stake, and they're going to sell stake. So that's the indication as far as market buzz is concerned on that particular block.
Got that. Thank you very much for that. In Apollo Micro, about 50%, a little more than 50% is held by the promoters. Retail have about 40, foreign investors, a little more than 7. And 1.5% is held by mutual funds. That's Apollo Micro. Thank you, Nimesh, as always, for that. Mitesh is now back with us for a few BTST calls that you can take forward for the weekend. Mitesh. You're on mute.
Yeah. I was saying I have actually, you know, STVT calls given the way that the market is nearly closing at the lows. So Nykaa is something which has come on radar. So STVT with a stop at about 232.5. Look for a target of around 225, 26. And the other one is an STVT on Uno Minda. That's a stock which did very well, had a good rally, and now is showing kind of profit booking correction. So STVT here with a stop at about 1277, 1278, and a target of around 1245 billion.
Okay, thank you very much for that. One auto ancillary which has done very well this week. Hormus has spoken about RACL Gear Tech, but Bharat Gear 16% up this week. It's a fresh high, and the stock has gained 30% this week and 55% this month. Bharat Gears, let's pull up a week and a monthly chart. But let's put the spotlight on the MFIs. Motilal Oswal has written a note on it. Gaurav is here to tell us the details. Gaurav.
Well, yes, ahead of the result season, let's understand what is happening in MFI. First is that Motilal Oswal says that there is directional improvement, but the improvement is actually slower than what it was estimated in first quarter of FY26. When we talk about key risk, there was a risk of over leveraging, and at the same time, the stress which is appearing from some of the select states like Karnataka and Tamil Nadu, that is actually dragging the growth and the improvement that was expected to happen. Other than that, they have also highlighted one thing: flood-related impact in the states like Punjab and Jharkhand. It is going to be seasonal, and the impact is likely to get consumed within 2 to 3 weeks. And at the same time, they have highlighted that Assam could be one point to look at because customers do not have the absorption capacity to repay the high-ticket debt that they are getting. Other than that, industry loan growth, we have already seen it has declined almost by 19% since FY24. But now Motilal Oswal believes that from second half of FY26, we will see acceleration in the growth. In terms of the overall MFI cycle, they believe that the worst is behind us, and from here on, industry is likely to improve. In terms of credit cost, which was higher, they believe that the legacy stress is likely to keep credit cost higher for the coming quarters in near term. But from fourth quarter of FY26 or in FY27, we will see this credit cost also coming down. As a result, they have given 3 key stock ideas. First is that they have upgraded Fusion Finance to buy because they believe that the current entry level at a valuation is lucrative. When we talk about Credac, they have reiterated their buy rating despite having higher valuation because they believe that the improvement and the recovery is going to be faster than the industry. And third is that they have downgraded Spandana Spurti to neutral. And the reason being that they believe they do not have any near-term triggers, and that is the reason they are being a little pessimistic on this stock. So definitely ahead of the result season, we will be watching out on MFI space and specifically on the 3 stocks that they have highlighted.
Okay, all right. Thank you very much for that, Gaurav. We'll keep that in mind. No respite for the market, by the way, 234 points down and not too far away from the intraday low that we've hit today. That low was 24,629, so basically 630, and we're just a couple of points away from that. Well, it's a good time to actually revisit what a year it has been, because guess what? It's been exactly that, 1 year since the market fall pretty much began. We have Hormaz now joining in to tell us what the journey has been like, and it's been a painful one, I think, for many stocks, but there are those who've outperformed. Here you go, September 27, 2024. That's when we hit that record high. Seems such a far memory now, Hormaz.
Almost distant memory, indeed. 26,277, that record high, which was actually tomorrow, the 27th of September. Many stocks also made record highs on that day, and since then have not seen those levels. And since that level, of course, this is as of yesterday's close, at 5% down on the Nifty. We'll add a couple of more percentage points to this today. 17 stocks that have delivered positive returns in the last 12 months, and more than 24 stocks on the Nifty have declined 10% or more in these last 12 months. Now, ever since the Nifty made a record high, we've seen a lot on this market. The consistent FII outflows, sluggish earnings, cuts to the EPS estimates for the Nifty. And then from the start of the year, the reform push began from the government's front as well. We saw income tax cuts during the budget. Then came the tariff tantrums in the month of April. They still continue. And of course, we saw the GST reforms also taking place just this month. But among the Nifty performers, which are the top ones? Surprise, surprise. Eicher Motors is the top performer, 38% higher on that stock. BEL, of course, the defense stocks that have done well, 37% on that. Bajaj Finance, the compounding story of the decade, 30% higher in the last 12 months. Has seen some bit of underperformance of late, but still among the list of top gainers. Maruti, of course, with the recent rush in auto stocks. And Eternal, the new Nifty entrant, also making its way to the list of top performers. The list of worst performers is slightly longer though. IndusInd Bank has halved. Trent, with some positive returns almost over the last decade, is down 40%. Tata Motors, the list of woes just don't seem to end for this. TCS, the worst performer on the Nifty. IT, since that index made a record high in December. And Bajaj Auto down another 30%. You take a list of the other underperformers: Asian Paints, Coal India, Infosys, NTPC, HCL Tech, IT has been the biggest drag on the index over the last 12 months. You take a look at the mid-cap index. Well, of course, mid-cap and small-cap indices made their record highs in the month of December, but you're still taking a one-year view here. The mid-cap index was down 5% in the last 12 months. Almost half of the index has declined 10% or more. And if you take a look at the best performers here as well, there's an underperforming name as the best performer. Paytm is up 70% in the last 12 months, as is BSC. And look at Muthoot Finance, Vari Energies, Defense continues to make a mention here with Masgaon Dock as well. You take a look at the list of the underperformers and you will get to know Ola Electric, that has nearly halved. Sona BLW has nearly halved. Tata Technologies, the woes here continue as well, is almost approaching its IPO price now. And Godrej Properties, the list of real estate underperformers, 38% lower in the last 12 months. The losses of the small cap index are slightly bigger as compared to the Nifty and the mid cap index, down almost 7% in the last 12 months. And more than 55 stocks on the small cap index have declined 10% or more. But look at the outperformers here. Laurus Labs has nearly doubled. Amber Enterprises is up 80%. Garden Reach, another defense name, up 60%. And an IT name finds a mention here, Sagility, up 50% in the last 12 months. And the list of underperformers on the small cap index, the Tejas Networks has halved, HFCL has halved, as has Ramkrishna Forgings, Natco Pharma and Sonata Software too, seeing losses of anywhere between 40 to 45%. That was the year gone by on the index since it made a record high, and we are heading into a very, very important month with lots of triggers, starting off with the second quarter results.
And the policy next week. Thank you so much for that, Hormis. Just last week, Prashant, we were saying that, it's perhaps going to be a good Diwali and markets are priming, that maybe we'll get back to our all-time high levels, but we've just increased the distance between the current level and 26,300.
Blame the IT services sector.
And pharma.
And pharma. Yeah. Well, why should I be blamed alone? But it's true, right? I mean, it was so far it was just about goods, and for the first time with this H-1B fee, etc., which became services, and it just raised. I just looked at if you can pull up the week-to-date changes. It's in the Nifty IT index is down 8.5%. That's Friday to Friday. It was slow burn early on the back of H1B. There was not very much by way of a cut, but it just accelerated into the last 2 or 3 days. Of course, today included 2.5% cut there. We'll take a break. I think there's about, 5 minutes to go for close. We are back just to sort of wrap up things and get you more opinion.
It's been a tough Friday. It's been a weak week as well. The Nifty is going to end below 24,700, down more than 200 points in the index on Friday. But for the entire week, it's a gash of nearly 2.7%. The mid-caps also in free fall. For the day, 2% lower. For the week, 4.5%, with the small-cap index down closer to 6%. Look at that advanced decline ratio. By the close of trade, if you've got to put it in numbers, we had 500 stocks advancing for 2,400 declining. It's about 2 stocks to 9 stocks. That's the extent of the pain that you could see. Like bears in complete control. Sectorally, it's the IT and pharma index. Also this week, we saw an escalation in the tariff tensions. It started with H-1B visa hike, and then add to the pain for the Indian IT sector were Accenture's poor guidance for FY26. But we ended it with a potential blow on pharmaceutical, or at least worries, about a tariff coming through. Individual stocks, at least as we wrap out the day, Innocent Bank, top loser, 4% lower. M&M came in for profit booking. Tata Steel, Eternal, Bajaj Finance, Sun Pharma were the stocks under pressure on the way up. Only an L&T stands out, 2.7% up. Tata Motors, ITC, Eicher Motors saw some grain on the screen. Well, that brings us to a close on today's trading session. As I said, it's been a tough one, a forgettable week, the worst weekly performance since February of this year. Get into a break. On the other side, we'll come back with Editor's Roundtable. Don't go anywhere.